If you've been to the grocery store recently, you have seen sky-high beef prices, insane coffee prices, rising corn prices, and most notably, borderline extortionate egg prices. Thanks to a nasty bird flu outbreak, one that killed 20 million hens in the fourth quarter, the average price of a dozen eggs in this country is $8.11. That's nearly triple the 10-year average. No wonder people are upset about inflation. I bring this up because last Wednesday, Brett in California called in to ask about a company called Vital Farms, which is a pasture-raised egg producer. And I said, I got to do some more work on this thing. I decided to wait for the company to report. Now that we've seen the earnings this morning, the stock's, well, it's getting hammered. It's down 9% today. Good that I waited. So what do we do with this egg producer? Vital Farms came public in 2020 at $22 per share. But the stock quickly shot up to the low 40s in its first couple of days of trading before spending the next couple of years going steadily lower. This thing finally bottomed at $7 and change in mid-2022. Even by the end of 2023, it had only bounced back to 15. But then, last year, the stock caught fire. Vital Farms surged to $48 last summer before pulling back to the low 30s as of today. This one caught fire because it was a genuinely great growth story. Nobody cared about growth in 2022, right, or most of 2023. But by last year, the whole group came back in style into Wall Street and suddenly learned they learned how to appreciate skyrocketing earnings numbers again. And make no mistake about it, Vital Farms has been a growth machine. Now, coming into this year, Wall Street seemed pretty bullish on this one, sanguine. Vital Farms was taking share with its humanely raised eggs, allowing them to charge a premium price for a commodity product. Plus, as the bird flu outbreak started gaining steam, some analysts figured that Vital Farms would be a big beneficiary, as their cheaper competitors would be forced to raise prices. Suddenly, these formerly expensive eggs are looking a whole lot less pricey in comparison. In fact, these guys haven't raised prices in over a year, despite the bird flu epidemic push up the cost of non-branded eggs. So what the heck happened then with the quarter when Vital Farms reported this morning? They delivered an excellent set of numbers, a clean top and bottom line beat, 30% like-for-like revenue growth, 280 basis points of gross margin expansion, 23 cents of earnings per share. The street was looking for 16 cents. Looking to the future, Vital Farms acknowledged that it's supply constrained. But the CEO said, and I quote, as the year progresses, we believe the supply chain investments we made in 2024 and into 2025 will begin bearing fruit. We expect our business to accelerate in the second half of the year as we add to our supply, helping drive us toward our ambitious net revenue and adjusted EBITDA guidance for 2025 and beyond, end quote. And hey, management issued a very impressive full-year forecast, calling for at least 22% net revenue growth, 15% adjusted earnings before interest, taxes, depreciation, and amortization. What a story, right? Now, after these numbers were published at around 7:30, Vital Farms stock soared in pre-market trading, as you could expect, up more than 10% at one point just before the open. The stock opened up nearly 7%, and it looks set for a very big gain today. But almost immediately after the open, the stock reversed, moving into negative territory, and it stayed down, ending the day down a hideous 9% decline. And it's not a tech stock, it's an egg stock. So what the heck then went wrong here? Well, not good. Alongside its quarterly report, Vital Farms filed its 2024 annual report today. That's the 10-K. And that document included the disclosure of what is known as a material weakness in the company's internal control over financial reporting. Material weakness is an accounting issue. Accounting related to how Vital Farms tracks orders and invoices its customers, something that impacts revenue and accounts receivable. Wow, revenue when it's impacted very bad. Vital Farms explained, quote, control deficiencies did not result in a material misstatement of our consolidated financial statements and related notes, end quote. Okay. But they said they've instituted a plan to solve the problem. But then they mentioned that, quote, there is a reasonable possibility that a material misstatement of the financial statements would not be prevented or detected on a timely basis, end quote. That is nothing you ever want to hear, okay? As far as accounting issues go, this one doesn't sound like a huge deal, but if you see this kind of statement, it's hard to trust the numbers, and I hate that. One more thing. Just yesterday, the Trump administration started rolling out a plan to combat avian flu and reduce egg prices. In an op-ed published in the Journal, I don't know if you saw it, the Secretary of Agriculture, Brooke Rollins, the USDA, announced a plan to invest up to $1 billion as part of a plan to solve the problem. Will these efforts work? But I look like a poultry farmer? I mean, who knows? But I will say that the Vital Farms CEO sounded pretty optimistic about the plans announced yesterday during his appearance on CNBC this morning. And for what it's worth, Yesterday, for the first time since September 6th, the price of eggs didn't go up versus the prior day. So maybe that's positive, though not necessarily for Vital Farms. It does if it means that the temporary price advantage goes away. So those are the details. But let's get an answer for Brett in California, okay? What should we do with Vital Farms going forward? Now, unfortunately, this is really my rule, okay? I have to stay on the sidelines here. See, I've got a hard and fast rule that says, and I used to have it on my machine, accounting irregularities equals sell. Okay? Accounting irregularities equals sell. While this specific accounting issue doesn't actually seem that bad at first glance, I created these rules for a reason. And virtually every time I've gone against them, it's blown up in my face. Plus, if the Trump administration's new plan to fight bird flu actually works, well, that's bad news for Vital Farms. Bird flu has made everybody else in the industry raise the prices, which is why Vital Farms premium eggs suddenly sell at a similar price to regular eggs. If we fix the egg shortage, everybody else's egg prices will come down, and their product will look expensive again. To be clear, I hope the government plans work because I want lower egg prices for you, for me, for everybody. It's just that the lower egg prices, not good news for Vital Farms. Longer term, I think it's worth circling back to this one, but they got to fix their accounting issues. Until that happens, I'm not eager to stick my neck out for Vital Farms. More broadly, this whole exercise shows you how difficult it can be to identify high-quality stocks. Yesterday, Vital Farms looked like a great story. Now it's a questionable story thanks to the accounting issues. I honestly think Brett in California had a pretty good thesis here, and the reported numbers we just saw from Vital Farms this morning certainly bear that out. And yet, because of this opaque accounting problem, shareholders are sitting on a big loss today. Rather than the big gain, it looked like they get in pre-market trading. That's just how it goes. Bottom line, thanks to Brett for calling in about Vital Farms. I hope that they get their books in order, and I'm sure they can one day, and then we can look at this thing down the road. But accounting irregularities, they equal sell. I do believe it's a good company with an enticing stock, but I'm not ready to endorse it. Tyler in Florida. Tyler.
Hey, Jim, listen, all my friends spend all their money there. How are we feeling about Chipotle?
All right. Chipotle is a growth stock. Now, I preface by saying the growth stocks are suddenly incredibly out of favor. I think Chipotle is good. It's come down a lot. I think that Scott Boatwright's doing a good job. I think it's actually a pretty decent level to start a position. Please don't buy this all at once. This stock has become very erratic of late. Frank in New York. Frank.
Hey, Jim. How you doing today?
Frank's tough day for our friends in tech, so I'm going to say it's just an okay day. How about you?
I'm in tech and I'm drowning. So,
okay.
But a friend of mine lives in Kansas City. He says the Dutch brothers. He says that there's a line there every day. I don't have one by me up here in Westchester, but are they starting to take a lot of customers?
They're not here. No, they're not. But they're not in New York yet. The stock has had a big run. We had, by the way, just so you know, we had Christine Barone on. Ever since she's come in, this stock has been a rocket ship. Look, it now's at 126 times earnings. I am a big believer in Dutch Bro, but I will tell you this. I do think that the Brothers Dutch stock could cool off a little bit before you need to start buying, and I would do that. All right, look, only once Vital Farms gets its books in order, not until then, I think you should consider putting a few of your eggs in this basket. We can't yet, though. Hey, much more money ahead, including my deep dive on infrastructure with the CEO of Martin Marietta Materials. Then what's the road ahead for NVIDIA after this incredible hammering today? I'm going to tell you where I stand on today's decline. I've been pretty quiet about it until tonight, and all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.